Did you know that the more debt you're in, the more profit your bank makes? This isn't conspiracy theory. It's exactly how the system was designed. While you struggle to pay bills, interest, and monthly installments, banks are raking in billions from your financial mistakes. Today, I'm going to reveal some truths your bank manager would never tell you. If you're ready to stop being manipulated and start building real wealth, hit the like button, share what surprised you most in the comments, and subscribe to the channel. Let's break down how this system really works. Together, why banks benefit from your poor financial decisions. Let's get straight to the point. Banks don't profit when you make smart financial decisions. They make money, a lot of it, when you spend without a plan and end up needing easy credit and paying high interest. The more people make financial mistakes, the more banks earn through fees, charges, penalties, and renegotiations. It's a vicious cycle fueled by misinformation and the urgency to solve short-term money problems. How debt makes banks rich. Banks make billions from the interest they charge on overdrafts, credit card debt, and poorly planned loans. The more tangled up you are in debt, the more they profit. And that's exactly what the system encourages: credit dependence. According to Brazil's central bank, the average annual interest on revolving credit card debt is over 400%. Sounds outrageous? It's real. And yet, millions of Brazilians fall into this trap every single month, feeding a system that thrives on people's financial struggles. Real example: a credit card turned nightmare. Imagine you have a credit card bill of 1,000 Brazilian reals. If you only pay the minimum and fall into revolving credit, that debt could grow to over 5,000 Brazilian reals in just 1 year. What seemed like a temporary solution becomes a snowball that's impossible to manage. And who profits from that? The bank, earning passive income off your financial stress. You end up working to pay off a debt that keeps growing on its own, while the bank's profits rise effortlessly. Home loans that favor the bank. Another example: mortgage financing. Many people think they're fulfilling a dream, but don't realize that paying off a house over 30 years can mean handing over 2 to 3 times the property's value to the bank, sometimes at the cost of their retirement. Bank employees even earn commissions for selling larger loans. The more you borrow, the more profit the bank makes. What feels like your decision is often influenced by someone with a direct interest in your debt, not your financial stability. And if you think your money is safe just sitting in the bank, wait until you see how the system really works behind the scenes. How the banking system really works. Fractional reserve lending. Most people believe that the money they deposit in the bank stays safely stored there. But that couldn't be further from the truth. In reality, your money is used almost immediately to generate profits for the bank through lending. Very few people know this. And that lack of awareness is exactly what allows the system to operate without much public scrutiny. Banks don't just hold your money. The financial system runs on what's called fractional reserve banking. That means banks are allowed to lend out up to 90% of the money you deposit, keeping only a small portion as a required reserve. If you think your cash is just sitting in a vault waiting for you, think again. The bank lends it to someone else, earns interest on it, and moves the economy while you earn almost nothing in return. Money keeps circulating in a chain. If you deposit 1,000 Brazilian reals, the bank can lend 900 Brazilian reals to someone else, who may deposit that 900 Brazilian reals at another bank, which then lends 810 Brazilian reals to someone else, and so on. This creates a kind of virtual money multiplication inside the system. It gives the illusion that there's more wealth than there really is, but all depends on trust. As long as people don't all try to withdraw their money at once, the system works. Bank runs, a risk no one talks about. If every customer tried to withdraw their money on the same day, the bank wouldn't be able to pay them all. That's what's known as a bank run, and it has happened many times throughout history, often with devastating consequences. That's why, during financial crises, governments and central banks have to step in quickly. Without collective trust in the system, it collapses like a house of cards. Limited protection, only up to a point. In the U.S., for example, the FDIC insures up to $250,000 per account if a bank fails. In Brazil, the FGC guarantees up to 250,000 Brazilian reals per CPF per financial institution. But what if you have more than that? That extra amount isn't protected. And if the bank goes under, you could lose everything above that limit. Very few people know this. And even fewer take steps to protect themselves. So, after all this, do you still think your bank is 100% committed to your financial well-being? Banks are not financial advisors, and they don't want to be. A lot of people walk into a bank expecting financial guidance. But here's the harsh truth. Their interests are not aligned with yours. What sounds like advice is often just a cleverly disguised sales pitch. It's not that your bank manager is intentionally misleading you. It's the sales targets and bonus system that shape their behavior, even if they genuinely want to help. Bank employees are salespeople, not advisors. Bank staff have quotas to meet. They earn bonuses and commissions for every loan, credit card, or product they sell. This creates a direct conflict of interest. Your financial well-being can be sacrificed to help them hit their targets. If you leave the bank with more debt, but your manager hit their goal, they've won. And you're left with another monthly payment in your budget, thinking you made a smart move because you trusted the bank's advice. The result? More debt. How many people do you know who financed a car or a house they couldn't really afford because they trusted what the bank manager told them? The result? Overwhelming debt, a damaged credit score, and lost assets. What started as a dream can quickly turn into a nightmare. And the worst part? When you can't pay anymore, the bank collects a debt, takes your property, and still keeps charging you. It's a lose-win game, and the bank always wins. And if you think leaving your money in a savings account is a safe way to build wealth, get ready for another uncomfortable truth. And the worst part? When you can't pay anymore, the bank collects a debt, takes your property, and still keeps charging you. It's a lose-win game, and the bank always wins. And if you think leaving your money in a savings account is a safe way to build wealth, get ready for another uncomfortable truth. Tiny returns. Today, savings accounts often yield less than 1% per year, depending on interest rates. Meanwhile, real inflation is over 4% annually. That means that even if you're saving, your money is losing buying power every single month. It's like your money is shrinking. You think you're being responsible, but in reality, you're slowly losing value in silence. Real life example. If you put 10,000 Brazilian reals in a savings account for 1 year, you might earn about 70 Brazilian reals in interest. But if inflation is 4%, that same money now buys less than it did before. In other words, you're being penalized for being cautious. It's like running on a treadmill, thinking you're moving forward. The effort is real, but the progress is an illusion. That's the trap of savings today. The solution? Smarter investments. The only way to protect and grow your wealth is to invest strategically. There are options that beat inflation, like government bonds, like the IPCA, real estate funds, dividend stocks, and even international investments, many of which are accessible with small amounts. You don't need to be a financial expert or a millionaire. You just need to learn the basics and take the first step, because those who only save slowly get poorer, while the investment world keeps growing for those who stay informed. But what if, instead of being exploited by the bank, you became a part owner of it? The alternative, becoming a bank owner. Yes, you can flip the game. Instead of being an exploited client, you can become a bank shareholder and profit from the system. And the best part? Anyone with discipline and knowledge can do it. The key is learning to play the capital game like major investors, putting your money to work within the same system that used to exploit you. Investing in bank stocks. Large banks like Itaú, Bradesco, Banco do Brasil, Santander are publicly traded companies. You can buy their stocks and receive a share of their profits through dividends paid regularly to shareholders. Instead of paying interest to the bank, you start receiving profits from it. A complete reversal of the financial dynamic, and a strategy the wealthy have used for decades. Real-world examples. Banco do Brasil paid out over 10% in dividends in 2023. Itaú distributed billions to its shareholders. Banks like JP Morgan and Bank of America in the U.S. do the same. They're massive, highly profitable businesses. Shareholders in these banks make money while others pay interest. With each new indebted customer, shareholder profits grow. You can be on one side or the other. Investor mindset. The secret is shifting your mindset. Stop thinking like a consumer and start thinking like a business owner. That means learning, investing smartly, and focusing on the long term. Imagine earning a piece of the profits you're currently paying as interest. It's possible with a brokerage account, some basic knowledge, and consistent investing. You start small, but the growth over time can be exponential. That's how wealthy people think. Find ways to profit from the system, not be a victim of it. And you can start that transformation today. Now you understand why your bank doesn't want you to know any of this. Because the more informed you are, the less profitable you are for them. But that also means freedom. Once you understand how the system works, you can flip the table and start building real wealth. So if this video opened your eyes, give a like, leave a comment, and share it. That way, more people can break free from the traps of the banking system and start creating a solid, conscious financial future. Subscribe to the channel and turn on notifications so you don't miss any life-changing content. See you next time.